So I have a lot of subscribers here on my YouTube channel. My channel, by the way, is about investing for dividends and passive income that one can use to pay their bills. I have a lot of subscribers here who are just starting out or who are halfway through their quest of building their dividend portfolio. So they're actively buying stocks. They're actively buying positions to add to their portfolio the foundational elements of that dividend portfolio that is going to pay for financial freedom in the future. It's going to pay all these dividends that one can live off of. And so I get this question, subscriber question, pretty frequently here. Hey, Ian, when you buy new positions in your portfolio, how do you go about doing that? Do you buy it all at once? Do you average in? How do you think about that? Well, that is the topic of today's video. Hey everyone, I am back with another video about dividend growth investing. So this is going to be an exciting video. It's about buying new stocks, adding new stocks to one's portfolio. And look, I have a portfolio now with over 30 positions, so I am not actively buying new stocks right now. If anything, I'm trying to focus my portfolio. I'm trying to keep it more focused. But that being said, sometimes I do buy new positions. Sometimes when I buy a new position, I will sell another one to try to keep the number of stocks in my portfolio manageable and to make sure that each position in the portfolio is meaningful, because I don't want non-meaningful positions. And that is the core of today's video. So when I buy a new stock, this is actually my strategy right here. When I first start out, what I'll typically do is I'll buy a lump sum. So I will make a lump sum investment somewhere. So this is $0. This is higher, obviously higher than $0. I'll make a lump sum. But typically, especially in my historical track record as a dividend investor, I've been all in the market. So I haven't typically had stockpiles of cash, because the cash that I do have, I've put to work. I like to put my money to work so that my money can work when I don't want to. When I'm sleeping at night, when I'm having fun, when I'm doing something, pursuing my passions, I like to rest assured knowing, hey, I'm not working, but you know what? My money is working for me. My money is out there earning dividends and paying me checks as I sleep. And so historically, I don't like cash sitting around because my cash doesn't work for me. Now, that strategy is starting to change a little bit, being in 2018, market at all-time highs. Probably not a bad time to have an emergency fund just in case. That being said, historically, I haven't had huge amounts of money to just put in and buy a full position at once. And so that said, I'll typically save up a lump sum. But at this point, when I put my lump sum in, it's non-meaningful, meaning I dislike having positions in my portfolio that are really small. I'm talking typically positions that are under 1%, especially under like 0.5%. If a stock represents less than 0.5% of my entire portfolio, that is just not meaningful. That stock isn't going to be important in the portfolio. And I like to think that the stocks in my portfolio, they all have to carry their own weight. And I do like to differentiate. I have core positions, medium positions, and small ancillary positions. And so I have different types of positions and they all play their own role. But typically if something is smaller than small, it's like a minuscule position, it's not even a smaller position, let's say in the 0.5% to 1% range, if it's really low, I just look at that as noise. I look at it as clutter. It almost is a distraction. And I look at my portfolio in some ways as a work of art. And I'm serious. And having just these real ancillary positions that are non-meaningful, it just bothers me. The perfectionist in me, it just bothers me. And so anyways, when I commit to buying a brand new stock in my portfolio, maybe it'll be a lump sum and it'll be like a minuscule position. But what I do after that is I'll keep buying typically each month. And it will each month notch up a little bit. It'll keep buying and I won't stop buying until it's reached what I like to call this minimum threshold, and then I check the box. The minimum threshold is basically the dollar amount that I need to get to for me to feel comfortable that, hey, this is a real position. It's not a fake position. This is a real position in my portfolio that is pulling its own weight. It's not a minuscule position anymore. It's at least reached the bar of a smaller position. And maybe from here I take it up, notch it up more if I really like the stock to get it to medium. But until I've reached here, I'm just focused, laser focused on that stock to get it to where it needs to be meaningful within my portfolio. And I just think that this is good housekeeping, going from non-meaningful to meaningful. In life, think about one's house. When one's house is a little bit messy, it's a little bit cluttered, I've found at least it's really hard to think straight. I found that it's almost disrespectful in some ways of the house that one lives in. You have a bunch of junk, it's messed up. It's just not a very pleasant environment, and I like to run a tight ship. I like to have a very clean environment because when I found I have a clean, organized environment, I'm operating at a much higher level of productivity, and I can sleep better at night. Everyone's happier. It's just nicer. It's more fun to go through life that way. And I apply that same concept to my stock portfolio. So I don't want a cluttered portfolio. I don't want a messy portfolio with all these weird positions that are non-meaningful. I want a crystal clear, clean portfolio that is run at an institutional level. And I think at the end of the day, that's what it really comes down to, is having non-meaningful positions is characteristic of a non-institutional quality portfolio. But I want to run my portfolio at an institutional level, and that requires me to make sure that my positions are very calculated, that they're all meaningful positions. So as I always do, I've got my notebook and I want to see what other notes I took here. I've got a few more points. Okay, so typically when I am buying a new stock, a net new stock in my portfolio, not always, but typically when I start buying, I make my first lump sum investment, I try to time it at a time when I believe the stock is trading at a relative value in the market. It's a good price. It's a value price. And so an example, well, this is not a perfect example because I already own this stock for many years, but I own this stock, Southern Company. I just did a video on this. I'm going to link to it below. I personally believe in the broader market right now, Southern Company is a reasonable value. Just my personal opinion. So let's say hypothetically I didn't already own Southern Company, I were taking a new position in it. This would be characteristic of when I take new positions. I like to wait until the positions are on sale. But even so, even though I already own Southern Company, obviously I like to add to positions as well when they're values as well, and so it's a value and that's why I'm adding to it. But basically, because this commitment to get from non-meaningful to meaningful, it can take some time. It can take some averaging in. I like to at least start a new stock when it's already a value. If something is not trading at a value, typically I will wait to get in, unless I just have to have it. It's something that is so core to my future that, look, I know it's trading at a fair price, if not a little bit of a overvalued price, but I just have to get in because it's a core holding. I probably did a little bit more of that in my early days because in my real early days, when I was building the foundational building blocks of my portfolio, there were certain stocks that I just had to have as the foundation. But now that I'm a little bit further along, or a lot further along, I got a little bit more flexibility. So what else? Let's take an example here. So this is an interesting one that really applies here. Dr. Pepper Snapple, I own this stock. It was up 25% in a single day. I just did a video about this. I'm going to link to it below. The reason it went up 25% in one day is because they got acquired by Keurig Company. I'm really unhappy about this, by the way, but check out that other video below. You'll see why. Anyways, what's going to happen is I'm going to get a one-time cash dividend, and I'm also going to own some stock in the new company. What's going to happen, though, is the amount of stock I own in that new company, it's going to be inconsequential. It's going to be small. I've had this happen in the past with mergers and acquisitions, spin-offs. These types of situations can also create these kind of smaller positions. Typically when this happens, I just sell them off. There might be a really compelling case. I probably am not going to try to move too quickly here because maybe the combined company is going to be really good and they're going to pay a growing dividend. Maybe I will wait it out to see that, and if they do, I'm going to have to go on this path. I'm going to have to average in a little bit each month to bring it back to where it needs to be, to the right size. I have to right size it. But if I don't like the company, I'm not just going to keep that spin-off. I'm not just going to keep that noise, that mess in my portfolio. I'm going to get rid of it and redeploy the capital somewhere where it makes more sense. And so that's another way of looking at this same strategy. But really what it comes down to is good housekeeping, keeping things tidy, keeping things manageable and focusing on the best stocks. Because quite frankly, if a stock isn't worthy of at least meeting this minimum threshold, what is the rationale that told me to buy it anyway? What's the point? I only want to buy stocks that I'm confident putting money behind. And if I'm not confident to get it to this level, it probably should not be in my portfolio. So just a fun video today. I really appreciate that question. That was a subscriber question, a really good one. I know you guys are all out there building your portfolios, and I'm still building mine as well. It's been over 20 years here, but I'm still going, and so I will probably add more positions at some point and prune certain positions. Certainly with this Dr. Pepper Snapple thing, I will be losing a position most likely because I'm probably going to sell my shares in the spun-off company, like I said, unless it's really compelling to hold it. So that will reduce my number of positions by 1, which kind of opens room. Maybe there's something else I want, maybe there's not. I don't know, we'll see. Before we leave today, in terms of full disclosure, I just want you to know that I own shares in both Southern Company and Dr. Pepper Snapple, ticker symbol SO and DPS. And so I am long on both of those stocks. Also, in terms of a disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please do consult a licensed financial advisor first. If you made it this far, I want to encourage you to please head on over to my Instagram. I will link to it in the description below. There's some good conversations starting there. Really appreciate the comments there, the support. It's been fun. We've had some good community going there. And of course, the community here on YouTube is just thriving. And so if you have any questions, comments, feedback, just leave them in the comments below. Really appreciate that. And if you enjoyed the video, you want to thank me, please do subscribe to the channel, like, comment. All of that means the world to me. It helps me grow this channel even more, and that's really the goal here, is to build the biggest and best channel about passive income investing, dividend investing here on YouTube so that we can all learn from each other. Thank you so much for watching. I will see you in the next video.